I think there's a lot of things you can go through, but let's start easy. I'm going to give you 3-part question each. Introduce who you are, what your company does, and one crazy bet you're making right now. Start with you, Reza.
My name is Reza. I'm the CEO of Motion. Our company is a creative analytics platform for marketing teams. And the crazy bet that we are making right now is we're giving every single one of our customers their own virtual computer to run an AI agent out of.
Matt.
Matt Mayers.
Can we get another mic up here, maybe? Sorry.
Matt Mayers from Spellbook. We do AI contract workflows for lawyers at both law firms and in-house counsel. I think a crazy bet that we are making right now is to try and win in this market, which is one of the most competitive landscapes I think we've ever seen in the history of industry. And we are very excited to be in an incredibly fast-moving space, but it feels crazy to be participating in something that is so hot and exciting right now.
Is trying to win really a crazy bet?
I would say trying to win is always a crazy bet, and you kind of have to be a little bit crazy to play this venture-backed startup game.
Karam?
My name's Karam. I'm a partner at Inovia Capital. Probably the crazy bet we're making is instead of raising a much larger fund than last time, we're raising a fund to invest in a bunch of other smaller funds. So kind of the opposite of the mega fund trend that you laid out there.
Maybe for some context here, what do you typically invest in right now out of your fund?
So we have a couple of different funds that do everything from kind of pre-seed to pre-IPO investing. On the venture fund, where I spend most of my time, it's a Series A fund, a little bit of Series B, some seed.
Cool. I'm going to start here with Reza. Motion and how you got there is not the typical story. I met you. You were presenting a company called Shoelace. I don't remember, it was 5 years ago, 15 years ago. And you were building Shoelace. And in 2018, you had 6,000 users, 9% monthly growth. But Facebook and Shopify were making native integration, which challenged Shoelace. And then you spun Motion out of that. So how'd you go about doing that, and why'd you do that?
Yeah, it's a very long story.
The mic. Just eat it closer.
Oh, yeah, sorry. Yeah, I guess the short version of that story, I feel like a lot of the founder journey is to try to solve a problem that customers experience right now, while also trying to figure out where the world is going and how the thing that you're solving becomes much bigger in the future. And I think if you ever have to trade one of those two things off, it's better to solve a problem for customers right now, which is, I think, what our philosophy always was in building Shoelace. And so we were solving a real problem for customers, but the time was not on our side. We were solving a problem between two big platforms, and over time, they built more and more native integrations, which made the usefulness of our early product not as useful anymore. And so we kind of had no choice to figure out where we were going to take the company next. We spent probably a year and a half, 2 years, like just exploring a pathway out. Eventually, the company became like the obvious path for the business. We tried everything we could, from like pivoting the software, but the thing that became obvious and like where the market pulled us into was for the company to become more of a marketing agency. And so we accepted the fate of that. And so Shoelace became a marketing agency. We still had an engineering team. By the way, one fun fact of when we decided to turn the business into a marketing agency, it started to make a lot of money, which was nice. And so we were able to self-fund our own engineering efforts, and then through that, spent some time with some of our early customers to figure out what was next, and then Motion was born out of that. And this is basically like 5 years ago that happened. And so like, yeah, these things can take a very long time.
Just a couple quick follow-up questions there. Motion and Shoelace are two different companies now. How'd you do that? Why'd you do that?
Yeah, so Motion got spun out of Shoelace as a separate entity. Part of the reason we did that was that Shoelace had taken on some capital at the time, and like we weren't planning to shut that business down. And it was just a weird thing to have like two businesses in one, and it was very clear to us that like Motion was going to be way, way, way bigger than Shoelace ever could be. And so it just didn't make sense to keep them as two businesses. So when we raised our seed round, our seed investor Headline helped us basically spin the business out into its own separate entity.
And just another quick follow-up question here. So just fast forward today, where's Shoelace and where's Motion? Whatever metrics you can share or.
Yeah, so let's see, in terms of like a size difference, Motion is probably 100 times bigger than Shoelace. Shoelace is still around. It's a small marketing agency that a few folks are still running. But yeah, Motion has obviously become a beast of its own, and I think there's maybe like 5-6 people who work at Shoelace. The Motion team is around 80 people at this point and growing really fast.
Matt, I'm going to jump to you now. You have in a weird way, similar story. Can you tell how you got to Spellbook, what it was before, and then how you made that transition?
Yeah, so for the first about 5 years of our journey, we were operating under a different name. We were called Rally. We were still in the legal tech space, really trying to figure out how to bring more efficiency to both lawyers and businesses. We were chipping away, trying to find a deep level of product market fit. We'd raised a few rounds of funding. We were getting customers. We had decent metrics, but we had never really hit that meaningful level of product market fit where we felt we could rapidly scale at a VC level pace. After what we called sort of drunkenly stumbling through the jungle, trying to find a recipe that worked, we were inspired by GitHub Copilot at the time. So this was before ChatGPT, before the AI arms race really kicked off. And full credit to my co-founder, who some of you may have heard of, Scott Stevenson, who's been quite vocal on social media. He was really one of the first people in the world, I think, to identify that large language models could be extraordinarily useful for legal workflows, as they had been for engineers and their work as coders. He said, it's all language. We have GitHub Copilot, which is effectively an autocomplete for engineers. Why can't we make the same thing for lawyers? And we had a team of about, I think, 20, 25 people at the time. We just treated it as another experiment. Can we build a little side project to act as a lead magnet to bring them into our current product, Rally? So we whipped up a prototype. Scott coded it on his nights and weekends to get in front of customers as quickly as possible. And when we did, we experienced a visceral reaction from them that we had never seen before in anything that we had put in front of customers. So this was around the summer of 2022. ChatGPT, I think, was announced that November. Everything started going wild with the LLM boom. And we very quickly realized that it makes sense to push gradually more and more chips onto the Spellbook story. And so by the end of that year, we had pivoted pretty much the entire team to focus on Spellbook, raised our next round on the basis of that success, and never looked back.
So when like you said, you worked on the Spellbook product on the weekends, and the initial traction, was it an immediate switch, or what was the mind like? How did you guys know to go into Spellbook? How fast did it happen?
I'll be the first to admit that Scott said, "Guys, this is it. This is the answer. This is what we've been looking for." And I was quite reluctant because we'd had a lot of spiritual debt poured into our previous product, a lot of sunk costs, and I said, "Scott, I appreciate there's something here, but let's slow roll it a little. Let's experiment, as we have done with every other of the dozens of pivots we've made in the past 5 years." And so we found a compromise. We found a way to move really quickly with the Spellbook prototypes, gradually putting more and more resources onto it. But we did treat it as any other experiment. It wasn't as obvious back then as it is now that this was the future of legal technology. And so we slowly put on one developer, then two, then a couple salespeople, and eventually we were just like, okay, this is clearly working in a much more efficient way than anything we had done previously with Rally.
So, Karma, I believe Inovia is an investor in both companies. Both companies, let's call it, had to take time to find product market fit. So is this usually what you see, and what excited you or Inovia when you guys invested?
It's a very different story for both, actually. Reza, we had talked back when, Shoelace was the previous business, and there was another founder, Ali Asaria, who I guess Reza talked to on a regular basis, and he was always saying, like, listen, like, these guys have something, it's gonna start to break out, like, stay close to them. And I remember we were at like the tail end of a fund when Reza was raising his seed round, and he sent like this email with all these like amazing metrics and stuff. And my infinite wisdom, I was like, it's too late to do like a seed deal. And so we passed on that and did like a Series A deal, which is exactly at the same revenue level as it was 4 years ago. And we missed out on hundreds of millions of dollars of value creation with Reza's business. And then on Spellbook, Jack and I were on the board of a company called Ross Intelligence, and I was so done with like legal tech because we had this crazy experience where we got sued by Thomson Reuters, and we're still in a lawsuit, and there was all these investors who just wouldn't touch anything legal tech related. And so the associates who first found Spellbook, I remember you guys had this huge waiting list of people that were like willing to pay for it, even though like the revenue wasn't live. And I was like, this whole category sucks. Like, we can't do this. And to their credit, they went and started looking at the engagement metrics. And I remember we had a meeting on Thursday where we were debating whether or not to invest in Spellbook. And Monday, they came back with the numbers. And we were like, holy shit, like, what is this? We'd never seen anything like that for a company that early at the application layer. And so that's when, the team led by my partner Steve and Corey kind of dug more in and said, hey, there's something real here. The facts on the ground have changed, right? Legal tech isn't what it was when, Jack was building Clio and, we were trying to raise money for Ross, and the LLMs had become this massive enabling factor for it.
And so you got conviction, you invested in both. Both of them had a path where it wasn't, like the typical story here in the Valley is everything has to go up to the right away. So how much did their past history and their past revenue play into your decision, or did it not matter because it looked like they had signs of product market fit?
I remember in Motion, honestly, when it was first described to me, like what they were building, I didn't get the product at all. But you looked at the metrics and you were like, wow, like there's something here. Only because like I hadn't spent any time in creative strategy. I didn't understand why you needed a different product that would marry kind of analytics and visuals and all these other things. But you just looked at how fast the company was growing, how efficiently it was scaling, and then we started calling customers. And when we started calling customers, that's when kind of the penny dropped for us, that this was just different. Like, we weren't thinking about this in the right way. This wasn't like a small problem they were trying to solve. It was the problem they were solving for customers. So in that case, it kind of started with the metrics, and kind of the qualitative feedback we got was really what got us over the edge. And in the case of Spellbook, it was just the data and then meeting the team was what really clinched it for us.
I'm going to throw back to the founders here. You're both raising around. Inovia's at the table. Why Inovia? What got you excited about them as a partner?
Well, I mean, first of all, Inovia is is it the largest fund in the country, or the one of them? And so, there's something to be said for the validation that comes from the brand power and the cachet that the name carries. But I think more than that is the rapport that we had developed with the partners that work with us, being Corey and Steve. Your team actually came in a previous round with a smaller check size as a follow-on, which helped, I think, us get to know each other and sort of test the waters to see if there would be a strong relationship for a more meaningful contribution down the line, which ultimately materialized for our Inovia led our Series A, and we're still extraordinarily involved with Corey and Steve and the whole team, and I think it really does come down to the individuals, but it does help to have the brand, all the resources, the platform that comes with a group like Inovia.
Is that?
Yeah, so Kara mentioned Ali Asaria. Ali was one of the people who was like very, very early on in the shoelace story. We had spent some time with him. He was kind of giving us advice early on. And I feel like Ali was probably matchmaking this investment for years, because like he was always telling me how much he loved working with Karam, and how like through all the investors he's worked with, Karam always really stood out. And so I think like having that validation from other founders is really important, because like you bring on an investor and then it's unclear how that shapes and changes the dynamics of your company. And so I trusted Ali Asaria a lot, and he spoke really, really highly of Karam, and so I think that was a big part of it. In our Series B, which Inovia led, it was a competitive round. We had term sheets from American VCs, and so I don't know. At the end, it was pretty cool to do the round with a Canadian VC, and Karam's been great, and so it's been awesome.
So
Wait, can I tell one funny story of Reza when he was raising his Series B? So you go through your regular pitch, and at the end, we're always like, hey, do the founders have any questions about the firm? And if there's a couple of minutes left to kill, like we're always just like, well, what do you want in an investor? And Reza gave the most honest answer ever. He was just like, I want someone who's going to leave me alone and like let me run the company. And I loved it, because like I've been doing this for like 16 years, and it was the first time someone gave like a really, truly honest answer to that question.
I'll ask one more question about the raise for both of you. Did you guys optimize for the biggest, like the highest valuation? Why not, or why?
No, I don't think we optimized for the biggest valuation. I think there was a number that we felt like made sense, but then beyond that, didn't try to micro optimize for it. I think definitely, like to me, even more than the fund, it was like I knew this like going into it. The optimization metric for me was like literally the partner that we would work with at the fund, and then everything else was like much less important.
I don't think personally optimizing for the largest valuation possible it's not our favorite strategy, and I can see some of our louder competitors have, I think, taken that path. But for us, we've always been a more philosophically aligned with sustainable growth and progress. When you raise at these massive valuations, it can really alter the trajectory of how you're expected to grow and progress. And like what was spoken about previously, investors have different incentives. They have different business models and different ways of winning. So incentives aren't always aligned when valuations are maxed out, and it can create an environment where it's actually harder to succeed, I think. So we've taken a more realistic and sustainable path, and we believe it's continuing to work out for us.
And can't get through a growth stage without talking about AI. You guys were both, you pivoted into AI, Matt, and Reza, you were not an AI native company, but I know you've reinvented yourself as an AI company. So how'd you go about that? How'd you tell your investors, hey, we just raised a lot of money from you, but we're rebuilding everything to be AI native. So tell us about that decision, and how do you communicate it to your stakeholders?
Yeah, that was interesting, because so we started Motion around 2020, 2021, and right when we're entering our growth stage as a business, it's like, oh yeah, the whole world is changing underneath us, and we have to basically reapproach the entire business from scratch. And so the conversation post-Series B was interesting because we raised a growth round, and it felt like, when you do that, you have this like repeatable factory, and you're now just supposed to go into scale mode, which I think would have been the case for us if it wasn't for the fact that AI was changing the way every company was working. And so we had a conversation with our board and Inovia, and it was something like, yeah, I know you invest in the growth stage, but we have to like reinvent the whole business. But it was like, in our defense, so does everybody else. And the people who are not thinking about that are probably going to be dead anyways. And so it's not something unique to our business. It's just we are doing what we think is the right thing to do in this moment, which is not like sprinkle AI into our product, which is like rip everything out and reimagine it all from scratch. It's like a difficult thing to do at that stage, but it was the right thing, and it's paying off very well now. Like last year was like basically the rebuild year for all of that, and it needed to be done, and so it didn't matter how tough the conversation was. I remember we showed up to one board meeting. This was a lot of fun, where we basically said that we have no revenue targets for the rest of this year because we are in deep R&D mode, and then they were like, wait, are you sure? Couldn't you just do it while having it? And we're like, no, it's not going to work if we're trying to optimize for short-term revenue. We really do need to rebuild the whole thing. And so, but yeah, it worked out, so that was good.
I want to open the questions from the audience, but before I do, Karam, what was your thinking in that board meeting?
Well, it was even crazier because they'd had their best month and best quarter ever. And it was just like, holy shit, like this is working. We invested. It's growing at like 2-3x the rate it was when we invested. Everything's great. And then we had a dinner, Reza, I, and Brendan Chu, who's on the board there. And so at least there, I think like Reza kind of soft launched this and was like, hey, I'm thinking about doing this. And like Brendan, I don't know if you guys know him, is like absolutely exceptional. And so having like another kind of clear voice around the table definitely helped us like understand it. I think like I remember I was pushing back on like keeping targets, and Reza said something to the like of, listen, if I set a target, these folks are going to optimize for hitting that target, and they're absolutely going to do it, but there's only so many hours in a day. And the hours they're spending on how to hit that target this year is an hour they're not spending thinking about how to actually 10x the business. And the real target that matters, which is the year thereafter, because like we don't need to raise capital or anything thereafter. And so him like reframing the conversation in that sense, in that like this isn't us like pretending targets don't matter or anything else like that. It's us really helping unlock our people to think exponentially as opposed to linearly, made the conversation then a lot smoother.
Cool. Can I get a round of applause? Can we, any questions? There's a question back there, or there's a few. Let's go to the one back there. Stand up, please.
Hi, my name's Natasha. I have a home furniture and decor marketplace that combines expert advice, design expert advice. I started working on it full-time January 1st. I'm in cohort 11 at the DMZ now. My question is like, deep down, I feel like my product today is definitely not what it's gonna be a year from now. And I guess my question is for Matt, like you talked about experimentation. When you are trying to get to product market fit, how quickly do you experiment? Like, do you give yourself, like, what's the velocity on, like, is it weeks or?
Hours? I mean, you got to be going as quickly as possible is the answer. What is the least amount of work and time required in order to get data? And every experiment you design should be designed with that framing. If your experiment is going to take a year to prove itself out, it's probably the wrong experiment because there's a lot of micro experiments that you can do in the shorter term to get small pieces of data and better understand the poker table at which you're playing. There's no concrete, like I'm not going to say you should be running X experiments every week. It really comes down to your own business, what the experiments are. But as your job in the pre-product market fit stage is running as many experiments as humanly possible as quickly as you can and getting your team very much accustomed to running these experiments. I I frankly credit most of our success today with that foundation that we laid in those first 5 years, where we had constant whiplash. We were doing radically different business ideas all the time, building a tolerance, not just as founders, but for the whole team, building this tolerance for rapid experimentation and waking up one day and saying, okay, everyone, we're trying something new. And Spellbook was no different. We were able to say, okay, here's something else that we're trying. It's completely different than everything we've done before. And I think in a lot of teams, you'd get a lot of pushback. You'd get a lot of people upset about all of the investment that they made into the previous experiments. But we had built a culture where that was not only accepted but encouraged. And we did that until we knew very deeply that we had product market fit. And if you think you might have product market fit, then you don't.
We'll take one more question, but while we wait for that question, I'll say from all the teams I know, I think Spellbook is the most willing to throw something out to the public and to their customers, not half-baked, but as early as possible and get customer feedback and then adjust on the fly with the product. So the experimentation is truly part of their DNA. Let's take one last question, and then any other questions, we'll just, I'll just get it to the founders.
Thank you to the speakers. My question is for Matt. So, Matt, you touched on the sunk cost fallacy and the desire to persist on an idea because of the spiritual debt that's already invested into it. And so my question is, how can an entrepreneur or founder know when to continue persisting and pivoting on an idea that isn't necessarily working or isn't working as well as they want it to? And when can they know to diagnose the idea as terminally ill and simply bury the hatchet and start over from scratch? Thank you.
Reza, you can also jump in here because I think you guys have probably seen lots of.
Yeah, if you have, I'll think a little bit on that one.
I think even in the previous question, the thing that comes to mind for me is like, it has to come from a lot of conviction. And so the point of experimentation is to figure out which of your convictions are true or false. But I think it needs to start from some kind of deep felt conviction about the way something should be. And then the point of the experimentation is to figure out, are you dreaming? Are you correct? Are you correct, but you're too early? And that sort of thing. And so I would say, like, first try to listen to where really deep conviction is coming from. And, you know, founders might have a lot of conviction about a lot of different things. Over time, you learn that a bunch of them were not correct and you learned something. So I would start by looking at the number of things that you have really high conviction around, put the one that you have the highest conviction at the top, and experiment your way through to see if that conviction sticks or fades away.
I think, Reza makes some excellent points, and I'll say that where we had the deepest level of conviction was in the problem space and the mission. It was quite detached from the different iterations of solutions that we were experimenting with, but we knew deeply that the legal world was ripe for improvement via technology. And so while I say we had a lot of spiritual debt, it's because, you know, we were working on this one flavor of the solution for a very long time, but it really didn't take long to see that when something else was working much, much better, both qualitatively and quantitatively, it was a fairly quick no-brainer, and by quick I mean over the series of 3 months or so that we transitioned the entire operation to be working on it. But there were many times when we could have looked at Rally and said, this whole thing is not really working, we can't get to that level of product market fit, let's just hang up our hats. But we always knew that the problem was real, and it was just a matter of staying alive and running enough experiments until we found something that worked. And we still have that culture today. Obviously, we're in a different mode because we do have the crux of something extremely valuable that we're scaling very quickly, but every day it's still a new experiment. And how do we make this better? How do we roll it out faster? How do we increase customer satisfaction? How do we expand our market? All of these things are still experiments, and that mindset doesn't go away.
Cool. Can I get a round of applause, please? Thank you, guys.